Good morning. This is the Lulich Corner. I'm Jordan Lulich, and today I get the opportunity to sit down with John Jennings from Raymond James Financial from the thekannergroup. So John, first off, thank you for coming in, taking your time to sit down to share, about yourself, your knowledge, your experience, and what you do. I'd first like to get started with just giving you the opportunity to introduce yourself to everybody listening in on our podcast. So if you want to just introduce yourself and say a little bit about yourself.
No, I appreciate that. Thanks for letting me be here today, Jordan. I enjoy getting out there and just kind of talking about what I'm doing and what our team's doing, what we're seeing in the economy and whatnot today. So as Jordan mentioned, I'm John Jennings. I work with a company called Raymond James. I work for a team within Raymond James called thekannergroup. And essentially, I help my clients, develop financial plans and manage investments and reach financial goals. So it scratches the surface in what I do, but that's, the 30,000 foot, view of, what I'm doing on a day-to-day basis.
When people say financial advisor, most people I think associate that term with just managing investments, but is that, an accurate summary of what you do, or is there a little bit more broader scope of how you help people with their investments?
No, it's a good question. I think, a lot of times when people think financial advisor or stockbroker, you think maybe Jordan Belfort or Wolf on Wall Street.
Yeah.
And, I'm taking orders and the ticker tapes and bells ringing, but
that's not you?
No, unfortunately not. A lot more dull than that most days. But we like to focus a lot on planning for our clients. I mean, I think that financial markets, we play a lot there for sure, but I like to focus on things that we can control. So if you talk about planning and things that are within our control, whereas for financial markets, not as much, we try to emphasize those things for our clients and developing financial plans, looking at their long-term goals and seeing how their investments, stock market and otherwise, intertwine with those goals and make sure we're monitoring that as time goes along.
I think that's a huge theme because you got this business, you got this investment that you're managing, but really like that professional investment really coincides with someone's personal life, right? So it sounds like you're that link between their personal goals and their investment goals to help the two interlock and intertwine together.
Yeah, 100%. I mean, I think that money is a very intimate and personal issue. So a lot of times you're getting to know these people on a really deep level. You become good friends, part of the family. And so that's really helpful too, because, it's like going to a doctor. You got to be fully transparent. We got to know the good, the bad, and the ugly, and we got to get to know you on a deeper level to really understand what drives you and how we can add value to you and your lives and the lives of your family members too.
So kind of shifting gears a little bit, we've got a lot of realtors, a lot of self-employed business owners that tune in, watch the podcast that we work with. And so for those realtors, for those self-employed business owners, what's the best savings options for them? Because they're in a little bit different of a category from your typical W-2 employee, right?
Yeah.
Either a business owner, they're running a business and they're just, giving distributions from a corporation or for an LLC, or the real estate agent is working off commission. They're your 1099 employee.
Yep.
And so their common complaint that I hear is the tax burden, the tax liability, especially right now.
Yeah.
We're in March, April, everybody's getting ready to submit taxes. So, in terms of thinking about those individuals who have more planning and more thought that needs to go into that tax liability, where do you come in to help them?
Yeah, absolutely. That's a great question. So I would say definitely very timely right now. And fortunately, even though 2023 has passed, a lot of the tax savings opportunities as it pertains to retirement plans for those individuals are still options in a lot of cases. And things like solo 401ks or SEP IRAs or simple IRAs. It's not one size fits all. It definitely depends on, what their, aptitude is for savings and, if they have any employees. These are all factors that go into play. But, primarily I would just encourage those individuals, number one, you want to get in front of a competent CPA to really understand how to mitigate your tax impact and then also to what extent you could defer it potentially into a retirement plan or which one's right for you. So yeah, definitely a timely thing right now, but fortunately it's not too late. So we can certainly help out. We can make a lot of impact for those individuals because they do have a lot of options available to them. And just this year and moving forward in 2024, just to give you an idea, self-employed individuals could save up to $69,000 into a solo 401k or SEP IRAs. There's a lot of opportunity there for some tax savings and tax deferral.
Wow. So anybody who's has a large tax liability that they're facing for 2023, this is definitely something that you want to consider even retroactively is what you're saying for 2023. Or if you've already filed or if you're too late in the game for 2023, for thinking about 2024, it's something that you definitely want to put on the table, because one of the common things that I see, John, with business owners, with real estate agents, is there's a lack of financial planning and there's a lack of sitting down and tax strategy.
Yeah.
And that's the biggest thing that I hear is, how do you optimize your tax liability within the rules to make sure that you're capturing the rules on how they benefit business owners and real estate agents?
Yeah. I mean, I think number one, primarily just getting in front of the right people. I mean, because you're talking about people that are busy. I mean, I have family members in real estate, and so I see it. We're on Christmas vacation, and my sister's answering the phone on in lunchtime, and so it's wild. So those individuals are so engrossed in their day to day, and so I think it's really important to get good people in your corner that are educated and understand those tax laws and ways that you can take advantage of the laws for yourself as a self-employed individual, because that's a lot of my clients. They're so engrossed in their day to day, their professional lives, their family lives. There's a lot, these things move at light speed, a lot of these rule changes. And so that's why it's important just to have somebody that's knowledgeable about these issues, impacting them, that they can, properly put a plan in place for you to navigate those as they go along.
I'm all about having like a team of professionals. You've got your business attorney, you've got your financial advisor, you've got your CPA, you've got a team of professionals that's helping you, because a business owner's job is to focus on their business, not to worry about all these other different aspects.
100%.
And it's hard to be, a master of all these different areas where, then you're a jack of all trades, master of none.
Yeah.
So surrounding yourself with that team of professionals. But when you think about a lot of business owners, a lot of real estate agents, they're planners, right? They think about quarterly planning, annual planning, their business planning. So what other types of planning tools are out there that you think that people should be more aware of when it comes to their financial investments?
That's a good question. I mean, we just hit on some with the retirement plan options is for self-employed individuals or others, those that are operating businesses with 10 or 15 or 20 people on the payroll. And there's a lot of retirement plans available there. But even beyond that, for some of our retired clients, things that we're looking at today as we face potentially increasing tax code,
right,
is how to take advantage of today's potentially lower tax rates. And that's through things like backdoor Roth contributions, or Roth conversions where they make sense. We live in a demographic where I have a lot of retired clients, so people that have already done the savings and now they're in distribution mode. And so a lot of our goal there is to protect them from taxes or help capitalize on charitable giving initiatives. And one thing that I try to always talk about when I'm talking with retired clients or people that are forced to take money out of IRAs are things called qualified charitable distributions. So this is a underserved or underutilized tool, in my opinion, that essentially years ago the tax code changed. The standard deduction is so high right now that few people have the ability to itemize. And so this is a way that people can give to charities and get tax advantages that have since been lost because of the increase in the standard deduction. So it's not right for everybody, but that's one thing. Again, QCD is just short term for it. That's one thing that I'm leveraging a lot for my clients out there, especially it's so positive for our community to enable a positive impact for charitable giving too.
So are they taking their required minimum distribution from their retirement account and donating it to a charity while getting that tax deduction of the donating to the charity at the same time? It's like a 2-for-1 kind of type theory.
Exactly. Yeah. So the idea is, let's say you have a $10,000 required amount that has to come out of your IRA this year.
Yeah.
You have two options. You could either take that $10,000 and put it in your bank account and go and spend it.
Yeah.
Or a lot of my clients, there's people out there that don't necessarily need that cash flow. So, but they're charitably inclined. And so if you take a portion or all of that $10,000 and instead give it to your local food bank, who's a 501c3, it's as if you never got that money. You're not taxed on it, but it does count against your RMD.
Yeah.
So again, this is something that you want to get in touch with. Get in touch with a CPA or a financial advisor to make sure you're going about it properly. But I think it's a hugely impactful strategy.
So, the last, 3 years, 4 years, and you and I've talked a little bit about this. It's been crazy. I mean, what we've seen since 2020, it's just been unbelievable. And we're at a massive amount of debt nationally speaking. Who knows what the futures will bring, but all we know is we can look at the past. We can look at the last 4 years, even this year to date, the markets are doing really well.
Yep.
So if you're talking to that investor who's invested, do you keep your money invested? Do you pull out? Do you wait until the market crashes? I mean, a lot of people are I think, a little anxious about the future because of that uncertainty of what's going to happen.
Yeah.
What are your thoughts?
Yeah, I mean, that's my favorite question. I'll say number one, I'm not clairvoyant, unfortunately, but number two is I'm definitely not a fan of market timing. So, I think it really depends on the individual. I would say for you and I, we're young investors. Unfortunately, we're going to be working for a while. So, we got a long time horizon. We're talking about money in the market that we don't plan on touching for a long time. So it's difficult to say. It's impossible to say where markets are going to be in 6 months, a year from now. I have an educated guess, but I do have a high degree of confidence that if you look forward 5 years, 10 years from now, markets will be higher than they are today. So I think that we've seen time and time again that trying to time markets and pull out when things are good or buy the dips is just a lose-lose strategy in the end of it all. But for some of our retired clients who, are in their 70s or 80s and they've all of a sudden their stock allocations have swelled, is it prudent to be going and locking in some gains today and taking some risk off the table? I think it makes sense in certain instances. So again, case by case basis, but you're right. I mean, we're in a unique situation right now. I mean, we're looking at a mountain of debt. The cost to service our debt in our country has now exceeded our national defense budget on an annual basis. So
huge.
That's definitely, those are things that we're watching.
Yeah.
Sure.
So, I mean, it's probably a fair statement to say what worked in the last 4 years from an investment strategy is probably not going to work for the next 4 years.
It's going to be a lot different. I mean, I think that the last 2 years, especially, we've had this unique opportunity for safe money where you're looking at money market funds right now that are still paying north of 5%, which is great. I mean, those are really safe options.
Phenomenal.
Liquid options paying 5%. CDs are still paying north of 4.5%.
Yeah.
So you have some, and I love that because again, I have a lot of conservative clients that work with a lot of retirees. So to be able to get good returns on safe money is great. Unfortunately, though, looking forward, we have a Federal Reserve that expressed to us last week that they're probably going to be cutting rates 3 times this year. So that window of opportunity may be closing. It's not a guarantee, but it may be closing. But that could create opportunities elsewhere. In February last year, money market assets hit north of $6 trillion for the first time ever. So again, that rate is paying 5.5% now. 18 months ago, it paid 0.02. It went up really quickly. It can go down really quickly. You have to think that if those rates start to decline, more than likely that money in those funds is going to start to find new homes, maybe in the stock market, in the bond market, in real estate. So, opportunities are constantly shifting.
What I find just so interesting is that, when you look where we're at right now, we've got increased interest rates that have gone from 2% to, I don't know what they are right now, 7%. Mm-hmm. But the amount of money that people are sitting on is unbelievable. I mean, when you compare now to 2007, 2006, I mean, we're in a very, very strong situation. So just in kind of wrapping things up, what are your thoughts on the interest rates, on how they declined and then how they, increased, and what type of impact do you think that has on our overall market?
Yeah, that's I'll try to be quick on that one. But I mean, essentially, we had the pandemic, right? I mean, that was potentially catastrophic for our economy. So the game plan for the Federal Reserve was to cut interest rates to support an economy at risk. And then in addition to that, they flooded the economy with money to the extent we've never seen before. I mean,
trillions.
What they did in 2020 made 2008-9 housing crisis look like child's play, truthfully. So, I mean, there's a lot of that money still sloshing around the economy now. So we're kind of in uncharted territory to see where we go from here, but that's why we're watching closely. We're watching where inflation data is headed. I think that is really going to give us some insight into where the Federal Reserve is going to take interest rates. I mean, they seem pretty
confident.
They seem pretty, intent on getting inflation down to 2%. And it seems like it's trending that direction. But that's really going to be somewhere. I mean, I'm watching oil prices, for instance. Oil prices, that started to creep up. You notice your price at the pump is going higher. Oil is a big input into our economy. So, if that starts to head north, and we get turmoil in the Middle East or other parts of the world, that could, create upward pressure on inflation and then keep rates higher for longer. So these are all risks.
So many factors.
It's insane.
So many factors.
Incredible. Fascinating.
It is. And I love talking about it. I love hearing your insights. And there's not a way for us to really touch all the different things that we could talk about in, a 15-minute segment.
Unfortunately.
But if people wanted to continue this conversation, John, how can they reach out to you?
Yeah, absolutely. So our offices are based in Vero Beach, Florida. Either online, thekannergroup.com, or shoot us an email, thekannergroup@raymondjames.com. Our phone number is 772-205-2141. working with us, generally, most people come in, they kind of break down what they have, resources they have available to them financially and otherwise. We understand them a little bit more about their goals, where they want to get to in life as it pertains to their finances, family dynamics. And then we kind of take a little bit to digest that information and come back to them with some recommendations and see if, what we have to offer makes sense in working together. So we'd love the opportunity, anybody it's free consultations, come in and have a chat with us, have a coffee. We'd love to see if we can help out.
No pressure, all value. John, thank you for coming on. I'm Jordan Lulich with the Lulich Corner, and we'll see you next time. Thank you.